A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're hearing a lot about robots and robotics lately, and there's also expanded to the ETF universe, ETFs that have exposure to companies specializing in robotics and automated intelligence. Our ETF research director, Nina Mishra, has been keeping an eye on it, and she's going to fill us in now. So I guess it's inevitable. It's working its way into a lot of different areas.
Yeah, they are getting into our world. Our future could look something like this. So robotics.
That's kind of spooky.
Yes, it is. So robotics and artificial intelligence, they will transform our future.
Mm-hmm.
They will transform the way we work, the way we invest. They will transform our homes, workplaces,
mm-hmm.
factories, healthcare, transport, and whatnot.
Mm.
And in fact, there are growing concerns now that whether robots are going to outsmart human beings,
Sure.
and whether the future of humanity is in danger with robots taking over.
Mm.
And in fact, it is possible that these artificially intelligent machines could design more intelligent machines, leading to ultra-intelligent machines, and someone defined that as intelligence explosion, machines which are much, much smarter than human beings. But I don't think that is going to happen in the next 75, 80 years.
Well, you bring out a statistic in something you wrote recently that some research shows that the robot market's going to grow about 17%
Yes.
a year, and be worth $135 billion by 2019.
Yeah.
That's not too far away.
That's, I mean, we know that the technology is growing at an exponential pace. There's a lot of improvement in this technology, but the possibility of robots taking over humanity, that is not.
A little further out.
Yeah, that is not going to happen sometime in near future. For now, we can just, benefit from these technologies. And I would like to add that this is this space is with companies which have a lot of growth potential, but they are higher risk companies, mostly new companies, smaller companies. So instead of investing in some companies, it is safer to go via ETF route, which ETFs provide a convenient, low cost way of getting diversified exposure to this high growth, high risk industry.
You mean versus investing in the company stock directly?
Yes, which has higher risk.
Okay, so you have two examples here, two separate companies that have ETFs. One is the Robo Global Robotics and Automation ETF.
That's an easy ticker, Robo.
Yeah.
This has been around for about 3 years, launched in October 2013. The index is maintained by a team of robotics and financial experts. It has about 108 million in assets under management, very well diversified ETF with 85 holdings. It's not cheap, charges 95 basis points for expenses, and it has a lot of international exposure as well. About 43% of assets are invested in the US and 24% in Japan and rest in other countries.
That's an important point because robotics industry is not only growing here,
Yes.
it's growing exponentially around the globe as well.
Yeah, Japan has been an early leader in adoption of robotics technologies. Their companies have done some pioneering work, particularly in the field of industrial robotics. So exposure to Japanese companies makes sense.
Yeah. Okay, and now you're going to compare you've got a chart about the 1 year performance on that company?
Yes, so this ETF is up about 16% in the last 1 year compared to about 6% return for the S&P 500 during the same period.
Okay, and then the other example of a company in this area, Global X Robotics and Artificial Intelligence Thematic ETF. How is that different?
It's almost similar. But in terms of industry exposure, this also invests in robotics and artificial intelligence and automation companies. But there are minor differences which we are going to discuss. This is relatively very new. It launched just last month. So far it has been able to collect only 1.5 million in assets under management, less diversified with just 28 holdings. It's much cheaper compared to the earlier one with 68 basis points in expenses, and it has more exposure to Japan, where robotics is big, as I mentioned. 47%, almost half of assets are invested in Japanese companies, and 21% in the US companies, and rest in other international companies. So with almost 50% exposure to Japan, this ETF has a higher currency risk, particularly if the US dollar continues to rise. That is something which investors should keep in mind. Also, it is very new, just 1.5 million in assets so far. So I think investors should wait for some time till it gathers some more assets. But since it is, I like its lower, expense ratio, so this is something which investors should watch.
I saw the word thematic, and I thought maybe this company did work hinged on specific themes, specific industry themes.
No, they are investing in all kind of robotics and artificial intelligence companies.
Okay, and the performance on that one?
So since this is so new, I have just compared the last 1 month performance. It has done slightly better than the S&P 500 index during the same period.
All right. Do you own either of these is the question.
I do not.
All right, thanks. Thanks for keeping up on that trend for us, and I'm sure you'll hear from Nina more as more develops in that area about robotic ETFs. In the meantime, you can check out other ETF information on our website, Zacks.com. Just go to the home page, use the Funds tab in the top toolbar to navigate to that section of the website. With Nina, I'm Terry Ruffalo.